Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Wednesday, the 2nd of October, 2024, 6 p.m. Let me start off by wishing all of my Jewish friends out there a very happy New Year, Lashana Tova, as they say. All righty. So in looking at the markets, you can see we're up a little bit in the stocks. Metal markets coming back. Gold got beaten up compared to silver pretty good today, so it's trying to come back a little bit from that. You had a big rally in the dollar, up 49 points. Soft markets basically lower as we went through, and I'll get to the metals in a minute here. Most of the grain markets getting a bid. So let's talk for a minute about all we have coming out tomorrow, because there's a lot. We get the Challenger Group, this is the corporate amount of jobs, releasing their September U.S. planned job cuts. You heard me, job cuts. That's at 6:30. The jobless claims comes out at 7:30. S&P Global Group will come out with their final September service sector PMI. It shouldn't differ much from last month, for the beginning of the month. The Institute of ISM, as they're called, Supply Management, will release their service sector indices for September at 9 in the morning. Factory orders for August. That seems so far back, doesn't it? But August, well, that'll come out at 9. And we'll get the weekly EIA natural gas storage report, and that's going to come out around 9:30 a.m. Now, one of the things you have to keep in the back of your mind is the market's on pins and needles waiting to see what Israel will do. The Biden administration has let it be known tonight that they don't want Israel to go after Iran's nuclear facilities. Why is beyond me. It seems to me that Israel will do what it has to, and what we all know is once Iran gets a nuclear weapon, the whole game changes. Now, I'm not a military strategist. I couldn't begin to tell you what's right and wrong. The easiest target is to take out oil, and as you know, OPEC wants to increase their production. Iran is a member of that, but if you take out a lot of their oil facilities, they don't have to worry about what they're doing. And the members that have held oil back off the market, I'm sure they'd be all too happy to step in and fill the void of that oil that would be lost. So something's going to happen. What it is, I don't know. The president would prefer that Israel apparently go more in line with what happened from Iran. At some point, after you take 2 strikes from Iran and you're the one receiving them and you're going back, at what point do you say, nah, it's not tit for tat. Let's pick it up and you stop hitting me. And kaboom, you give them a hit. And maybe that's what they need. Tell me who's going to run to Iran's defense at this point. I doubt Russia's going to do it. I doubt China's going to do it. I doubt any Mideast nation wants to step in and do it. So privately, they're all a bit worried about all the chaos that the terrorism causes. So I just question it. Do I know? I don't know. That's just an opinion. But what I do know is it's got everything on edge, and I think you realize that. Tomorrow's reports are nice, but we're going to get to the U.S. jobs report. We'll see what that is. We know that the president, again, I just can't get off of this, he doesn't want to force the longshoremen back to work. They have said that they aren't going back to work, and even if the president ordered them to, they'd work at such a slow pace it wasn't like they'd be there. So the head of the longshoremen is telling you what that is, and I've got to say this, all right? I don't care if you don't like my opinion. They're against technology? There's got to be a way that humans fit in with technology and can do more. But to say we should go back to the 1800s and avoid technology to keep those jobs, it makes no sense when ports around the world will go with technology. So that's just my opinion. You can't stay in place. You can't stop time from advancing. Retrain the people. Figure out ways for them to get as many jobs as you can, because these short-term contracts, as we get better and better in technology, things will change. All right, so let's take a look at gold and see where it's at with all this. If the market were to close right now, and I know it seems so hard because you look intraday and gold's down $10, $15, but on a closing basis, if the market ended right now for the week, this would be an all-time high close. When you come over and you look at the chart, you can see You're just whipping back and forth. If you're trying to set a trend out of that, I wish you the best. It's going to be almost impossible for you to do so. When you smooth it out with this swing line, you do have the pattern of higher lows, but you have lower highs. Remember yesterday I was setting you up for that. So you got the bottom falling, the top rising. It's wedging itself into the middle, and from there something will happen. Can we get an edge to get an idea of what it is? Well, the only thing I can tell you on this chart with moving averages is supports back at the 18-day average of closes. Often that's where markets run back to figure out the next thing they're going to do. As long as the market stays over the 18-day average, the bias is up. The resistance is typically at the upper Bollinger Band or a window envelope, which is a percentage for most people from a deviation from the 18-day average. However, I do mine different. I do so much different. And I found, for me, a better way to do it using swing lines because they're more receptive, if you will, to what's going on. That's in my charting course. Let's keep going with it. All right, so the very next step that I look at is, did we lose the embedded reading? So let's go to the close today. I can't do it, but you did. I can tell you that. So the market lost its bullish embedded reading if it doesn't regain it by this number closing over 80 tomorrow. That's what it's got to close over. It stays lost, and the odds favor you're going to go back to wherever the 18-day average is before that high is taken out. That's all I can tell you about it. When you go to the gold-silver ratio, you can see the ratio staying in favor of silver as long as it stays underneath this red line, the 18-day average of closes in the ratio. As the numbers drop, that's less ounces of silver to get 1 ounce of gold. When we look at the silver, you lost the bullish embedded reading. Before it gets over this high, I think the market's going to make a run to the 18-day average of closes. Now, my silver report is up on the website at iraepstein.com. Again, iraepstein.com. I'll also put a cursor right up here so you can see it that way. It's off the board tonight at midnight Central Time, so you won't see that report again. In the copper market, I told you I thought we were going to get this market coming up where the 18-day average would get a bullish crossover over the 100. You now have it. So you've got the 18 over the 100 over the 200. We have, again, a bullish setup, and we haven't had one of these in a very, very long time. So do I think a hard break under these numbers is in the cards? I do not at this point in time. I think that any hard break will find support in that 440 area. In the platinum, the market is still overbought. It's done its job. It fought a battle at first from the 100-day average to the 200 in gray. Then it tried to poke up, never could hit the upper Bollinger Band, and then found support at the 18-day average and whipping back and forth with that and this. What else is happening? The market's starting to climb on the 100. Is this market starting to tell us a story that the world is going to see demand for these metals come up? Is it inflation? Is it war talk? Is it industries going to pick up? I'm in the camp that thinks China's going to succeed over time in turning the corner here. We are not falling out of bed. I'm reading reports right now where the Fed is thinking go small. That's the title of the reports. Go small, not big. And the reason is the economy is proving more resilient, especially so far the labor they were worried about. In the dollar index, as I told you, I thought the market, if it ran, could make it all the way back up to the Bollinger Band. My first inclination, I'm not going to move it. My first inclination was the market would fight a battle at the 18-day average. And if you think it didn't, I don't know what you're looking at. When it finally closed over that number yesterday, that opened the door that if it wants to run one more time, it's here. It's instantly overbought. So you're overbought up to that number. 101.47.48 is the number right in that zone. We'll see if you hit it tonight. You easily could. And on the way back down, I would bet the battleground's going to be 167. So you put it together, you're looking for what happens. Now you'll notice I've added back live so you can see the streaming of quotes as they go on. Obviously red means low. The gray means either unchanged or a higher high, and you'll see that if it's a new high, it'll light up gray with that as well. But right now, you know what you're seeing, and I think that's a little more interesting as we look at all these charts. Again, the silver report, IraEpstein.com. I'll catch up with you all in the other reports tonight and/or the morning reviews. Take